Hey, what's up, everybody? Rob Swanson back here again with another episode of FreedomCast. Hey, this is episode number 9. And in today's episode, we are going to talk about business. We're going to take a little bit of a sidetrack from real estate investing. We're going to talk about business. Now, the whole thing about real estate investing is going to get interwoven into this whole conversation because it's kind of what I do. I'm a business guy that happens to be a real estate investor. I'm a real estate investor that happens to be a business guy. I want to start us off with this. Did you know that 91% of people that have a net worth of $5 million or more created their wealth through owning a business? 91% of people that have a net worth of $5 million or more created their wealth through owning a business. That is a staggering stat. And if you're hearing it for the first time, my question to you is, what are you going to do about it? Because you can hear the stat and do nothing and complain about how things are going, or you can hear the stat and do something about it and take action. My son is 15 years old, and he's 15, so he goes in and out of this entrepreneurial bug. Sometimes he's into it, sometimes he's not into it, but at the end of the day, he is a naturally gifted people person, naturally gifted salesperson. He has sat and he's heard his mom and dad for 15 years talk about business, sitting in the back of the car from infant seat age on up to driving us around. We'll talk business, we'll talk investing, we'll talk life and real estate and deals and things that are going on, and he's heard it for years. And he's a naturally gifted salesman. He's a naturally gifted people person. So he has started a window washing business. And he's got a few little jobs right now that he's doing, and he's making good money, and he wants to grow that over the summer, and he wants to craft out and carve out his own destiny and do his own thing. Now, as we think about this, here's a 15-year-old who says, I'm going to go do this, and he's putting one step in front of the other. If you've listened to any of the prior FreedomCast shows, one of the episodes I talked about the top 10 things you need to do in order to be successful in business, a successful real estate investor or successful in business in general. And that success is sales. You've got to learn sales. Now, we're not going to go down a rabbit hole again on sales. We've talked about that in the past. We'll talk about it again in the future. But I want to just bring out some of these bigger points because it is so important that we talk about it. This is FreedomCast. This is the show about money, business, and life. This is about you creating your freedom. Now, in one of the prior episodes, in fact, episode number 8, we talked about the 3 different types of capital. There's financial capital, there's relationship capital, and there's knowledge capital. Now, we're going to talk more in this episode about the financial capital side of things, because if you do the financial capital side of things right, and if you understand how to generate and build capital and build wealth and create cash flow, you can put all these things into play like my 15-year-old son is in the process of doing right now. So just like my son sitting in the back seat of the car listening, or at the dinner table, or in the living room, or on vacation, or wherever we are talking about business and talking about different things that are going on, you get to listen in on FreedomCast and hear some of the same discussions and some of the same conversations. Now, we're going to put some additional structure, and we're going to do some things with FreedomCast moving forward that are going to give us some different segments. I'm just going to kind of open the kimono and talk to you a little bit about what we're going to do. We're going to have an audience question section on each FreedomCast, where an audience question comes in that's relevant and related to some of the things that we're talking about. We're going to discuss it. We're going to break down the question, break down the answer, and let you guys participate in the show. We've talked about this in the past. Our FreedomCast hotline, the Q&A hotline, is 720-605-6265. 605-6265. You can call or text that number and ask your questions, and we'll come back and we'll answer them on future shows. Now, the other thing that we're going to do is we are going to put in a little segment called the Weekly Insider. And what this is going to be is this is going to be a peek inside something that's going on in my business, in our business here, that you probably wouldn't know about unless I shared it, because it's things that we're doing and working on and improving and iterating and fixing in my business. These are a couple of the segments that we're going to do. We're going to add in a deal whisperer segment. Going forward, we're going to take a real estate deal or a business deal, and we're going to break it down. We're going to dissect it. So we're going to start to do some things that are not just core content and topic, not just a 30-minute conversation, but we're going to put in some additional things that I think are going to add some life and some value and some interest into this show. So let's start off with our first FreedomCast audience question. This came in via a text message to the hotline. And Joe asked this question. Hi, Rob. I've enjoyed listening to your show. I've seen some of your training videos on how to turn a 6% interest rate into a 36% yield. My question is, can you explain the difference between interest rate and yield, and how do I find these opportunities? Joe, great question. And I'm happy to answer it. Thank you for listening to the show. Thank you for letting me know that you've been enjoying the show. I appreciate that. That gives me the motivation to keep doing this, because I am actually having fun thinking about what should we talk about? How should we make this show interesting and fun and valuable to you as you sit back there and listen. So the difference between an interest rate and a yield. I'm going to assume that what you've seen is maybe one of the training videos that I have either posted on YouTube or a training video that I have posted on the website at robswanson.com, where I talk about maybe the note investing business. In real estate investing, there is investing and owning the hard asset of real estate, and there is also the paper side of the business. Now, banks, traditional banks, Wells Fargo, Chase Bank, U.S. Bank, banks are in the paper business. They try not to own real estate. They want the income stream that lending and securing their money against real estate will produce. So I assume you saw a video where we talked about either owner financing or creating a private money note, or in some way creating paper or creating a cash flow note and an income stream against real estate. Now, typically, and there are many different ways to slice this topic out, but in general, the interest rate is the face value that a certain amount of money invested will repay. Okay, that's the interest rate. So if you make a loan, if I make a loan to you for $100,000 and I make that loan at a 6% interest rate, you're going to pay me back my principal loan amount plus 6% annually. Okay? Generally, interest rates are described annually, so 6% annual interest rate. But that's a question that you always need to ask. What is this interest rate? Because sometimes a lender will put out, in particular, a hard money lender that is in the business of doing short-term lending, they might put out a 1% interest rate. Well, it's 1% paid monthly, which is a 12% annual rate. So always ask, what is the interest rate term? Now, how do you turn that into a 36% yield? Interest rate is what the investment, in this case, a debt instrument, a loan on real estate pays on the face value. $100,000 lent pays back at 6%. The yield is what actually you earn. So there are many different ways to slice up and increase the yield on a fixed interest rate. You change terms, you change principal amounts, you change payments, and you hold some of the other variables in the deal fixed. So in a note deal that I was talking about here that Joe asked about, you've got the number of payments. See, cash flow can generally and should generally be thought of as an income stream and as a certain number of payments over time. Now, one of the beautiful things about owning rental property is that as long as you own the asset, you have the income stream. So it essentially could be an infinite income stream, right? It never stops, it never goes away unless the tenant moves out or you sell the property. Now, one of the keys on that is you just factor in that occasional vacancy when there's a tenant transition. You factor that into your expense costs up front. And yet now you own that income stream, those number of payments for as long as you own the property. On debt, on owner financing or on private lending, there's generally a set number of payments before it's either paid off through amortization, meaning the loan is being paid down, or it pays off because the term of the note, the length of the note, is due. So, what are we talking about here? That is in this interest world. That's the number of payments associated with this income stream. The second thing is the interest rate. What is the face value interest rate? Now, in our case here, we're talking about 6%. Then we have the principal loan amount or the principal investment amount, followed by, which is the present value. It's $100,000 in our example. It's $100,000 that's paying out 360 payments, so 30 years at 6% interest. Then we have this little thing called the actual payment. So how much money is actually exchanging hands based on this $100,000 loan at 6% over 360 payments? That's the actual payment amount on the loan. And finally, there's the future value. So either the future value is interest only, and that payment just can go on forever until the entire principal amount is paid off, or it's amortized, meaning it's being paid off over those 360 payments, and the future value is zero. It goes to zero over time. You can change, if you hold fixed the interest rate, you can change some of the other variables and actually boost your yield. Now, I do a live training called the Freedom Blueprint Live event, and at this event, I do a particular segment that breaks down this type of deal analysis into several different scenarios and examples, and shows you how to increase and boost your rates of return on real estate backed investments easily. I show you multiple different ways to do it. What I'm thinking about doing is actually recording that training session in an online format and giving you guys access to it. If that sounds like something that you're interested in seeing, would you do me a favor? And would you shoot me a text to the hotline here for the FreedomCast, 720-605-6265. Just go ahead and shoot me a text and let me know that you would like me to turn that into a live training, and I'll go ahead and do that, because I'm talking to you about, a lot of different things here, and the face value answer to Joe's question is interest rate is the face value rate of return that an investment pays out. You can increase that rate of return and boost your yield, boost your actual return received by adjusting factors and figures and manipulating the investments. I'd love to show you how to do it. It's a lot of fun. It's the kind of thing that gets me pretty excited. You know, what I've learned over the years is that a lot of people that are in mainstream America, mainstream in the world, across the world, that don't have this added extra knowledge that you guys are getting by being on this show and listening to this right now, the higher the interest rate goes, or the higher the yield goes, the more skeptical people become. And the more people believe that there is added risk. And honestly, that can't be further from the truth. What really is happening is, to get the highest yields, it's knowledge that manipulates an investment deal and puts some deal whisperer juice into the deal to boost the yield. It's knowledge, the same exact investment that you would be happy with a 6, 8, 10% return, I might change some of the terms and actually boost my yield to 18, 24, 36% or more, because I have the knowledge. And so many people think that it's this, and it's the same exact deal. It's the exact same investment, right? The risk did not change. What changed is the knowledge and some of the terms. And by changing some of the terms, same exact deal, same exact risk profile, one way it pays out at 8% and one way it pays out at 32%. Which would you rather get paid out? I think you'd rather get paid out 32% when possible. Now, these tend to be shorter term deals. These tend to pay off in some of the trainings that I do. I talk about why they tend to pay off in 7 to 8 years a lot of times, and how these deals get structured. But I'll tell you what, knowledge capital will be your ticket to creating true wealth. All right, let's jump back into this. We're talking about business today. 91% of people with a net worth of $5 million or more have gained that wealth through owning a business. Now, I have my businesses and I have my investments, and I think this is an important distinction that we should talk about. There are businesses and there are investments, and businesses tend to be, at least in the earlier phases, when you're an active participant in the day-to-day aspect of the business, they tend to be more active. They tend to be an active component of your overall wealth building portfolio. Whereas your investments tend to be more passive. Now, here's one of the key things. In business, if you grow your business properly, that business becomes more like an investment, because over time, your day-to-day activity, the effort you have to put into that business on a day-to-day basis reduces. It goes down. And so your business starts to act like an investment. So the big difference when I think about a business versus an investment is I tend to think about being more active in a business, at least in the early stages, and I tend to be more passive from the beginning in my investments. And then I always think with a business, how do I transition the business from active business into passive investment? Okay, that's one of the key things that I want you to be thinking about in your business. What are you doing to turn your business into an investment? And when that happens, you increase your free time. One of the things that I talk about a lot are the 5 phases of this entrepreneurial journey. And one of the phases is increasing your free time. And that happens when you take the hustle the work you're doing actively daily today and figure out how to grow that business into something that becomes a passive income generator for you. What are you doing to make that happen? Are you building a business? Have you started a business? Are you thinking about doing a business? Now, there's a couple of things that I want to talk about, because there's a different reason. There are different reasons for having a business, and there are different reasons for having investments. And I'm going to break a couple of these down. Some of the reasons to have a business, or some of the reasons to have investments, are, number one, to create cash. Okay? Create cash. If I'm always in cash creation mode, because we've talked about in the past on FreedomCast that it does not take money to make money. It takes money to invest money. And so I'm always in cash creation mode so that I can move that capital, that financial capital, into the investment side of the equation. So create cash. Number two, generate cash flow. In everything that you do, whether active or passive, I want you to be thinking about creating cash flow. Generating cash flow. How do you reduce or manage or hold, or at least understand, your monthly expenses? What it takes for Rob Swanson's family to survive on a monthly basis. I gotta buy my kids food. The authorities keep telling me that. If I didn't have to buy my kids food, I'd have so much more money. But I got to buy them food. The government's really clear about that. I got to give them shelter. The government's really clear about that. I got to give them clothing. The government's really clear about it. So I have these fixed expenses, right? In my personal financial situation, I have these fixed costs to survive, to live, right? What I want you to do is I want you to figure out how you take the knowledge capital and generating cash and convert knowledge capital and financial capital, oftentimes leveraging relationship capital, into passive income. And what I want you to do is I want you to your first target is to get your passive income equal to your monthly fixed expenses. You got to get your passive income equal to your monthly fixed expenses, because you know where most people start? At the beginning of every month, they've got fixed expenses that are up here, and guess what? Their passive income, their recurring income that's coming in, is zero. So they have to go out and hustle to generate the cash, the income, in order to cover the expenses. And you know what most people do? Most people just get there. And if they fall a little short, they fill the gap with a credit card. And they've had to work to just get there. Right? That's chasing the income. So your first goal, if you want to build wealth, is to create an income stream that is, at least number one goal, equal to your monthly expenses. Because then guess what? Every bit of active investment you do after that is cash on top. And it's more capital that you can move from the active side into the passive side. It's more capital that you can do to enjoy life, right? But you got to get to the baseline. Passive income equals monthly expenses first. Now, then what I want you to do is I want you to double your passive income. Monthly expenses are X. Passive income is 2X. Now you've got some cushion. Now, whether you're working or not, you're increasing the capital that you can go and invest for more passive income. Now, ultimately, the goal is to continue to grow that from there. The next thing, business versus investments, reduce taxes. Real estate is a fantastic investment to reduce your taxes. The write-offs that real estate give you, called depreciation, are fantastic. Okay? We have many people, often business owners or high-paid W-2 employees that are looking for greater tax write-offs to offset their higher income. They come to us, they come to our business, Real Estate from Anywhere, and they buy investment property. They buy discount income producing real estate in good cash flow markets across the country. That's what we do as a business. Reduce taxes. And we help people do that by finding the discount income producing properties, managing the renovation process, and then leasing the properties from our buyers. That helps them get into that reduce taxes category. Most of them are pretty good at creating cash. Most of them realize they need to generate cash flow, which is where we come in and help. And then they're looking at this and they're saying, how do I reduce my taxes? And then finally, how do I shelter my assets? And now this is a whole different sort of investment topic about sheltering assets that we're not going to completely get into on this topic, but I wanted to talk about these things. Active business, passive investments, 4 things to be thinking about. Am I generating cash? Am I creating cash flow? Am I reducing my taxes? And am I sheltering my assets? Now, these are just 4 things of several that I could be talking about, but these are the important things to start with. So what does my business structure look like? Well, I started as a real estate investor. I was a real estate investor. I had this idea that I was going to get into real estate. I was going to flip houses. I was going to make money. I was going to buy rentals. I was going to build my passive income, and I was going to be a real estate investor. And I thought of myself as an investor. And then what I realized through the process and along the way is that I didn't want to just think of myself as an investor. I was a business owner. I needed to think like a business owner. I needed to operate like a business owner. I needed to act like a business owner. I was a business owner that happened to own a real estate investing business. Now, through that time, over the years, that real estate investing business has transitioned into other things because I'm a business guy. I'm a deal guy. When it comes to real estate deals, I love real estate deals. But you know what even gets me more excited these days? Business deals. I like business deals. Why? Because they're bigger. They're more scalable. I like that side of the business, right? And so in my real estate investing business, what I'm always trying to do is ask myself, not just how do I do a deal, but how do I leverage doing a deal and get a whole lot more scale? How do I get more out with little to no increase in effort in? That's how I think about business. So today, I have a real estate investing business. Okay, we have modeled over the years, my real estate investing business has taken many turns. And the reason for that is because the key to business success is that you've got to change with the markets. And so as the real estate markets ebb and flow and change, my business changes with it. That's why nearly 20 years later, I'm still in business because I recognize what the market is giving me. I adjust my strategies and I stay firm. Now, I've got a real estate investing business. I have a real estate investing franchise business. Now, you're going to notice a theme here. My businesses tend to be in a channel. My businesses tend to be in a real estate investing channel. So I've got the investing business where we buy and sell, buy and hold, renovate, construction services, lease properties, where we do all of these things, the real estate investing business, the real estate investing franchise. What that did is took all of the things that we're really good at, all of the systems, the strategies, the things that we know how to do, the processes, the things that many other people that say, I want to own a business, because 91% of people that own business got their $5 million net worth by owning a business. right? You understand what I'm saying here? You see where we're going? So we created our real estate investing franchise so that people could say, I want to own a business, because a franchise is your business. And guess what? If you look back at my top 4 business things: simple, systematizable, scalable, and high margin. Our franchise business is a high margin business. Compared to any franchise that I have seen out there, the real estate investing franchise business that we created is a high margin business for our franchisees, because I want our franchisees to make a lot of money and be happy and be successful in what they're doing. I want somebody that says, I want to own a business, but I don't want to start it from scratch. I want to reduce the learning curve. I want to reduce the timeline. I want to reduce the risk. And I want to step into a system that I can take and operate from day one. That's why we built the real estate investing franchise business. There was a need in the market. We saw it and we solved the need. Now I'm going to give you a quick little update here. We've got a brand new franchisee that started 8 days ago in a market across the country. And in those 8 days, he has been putting both sides of deals together. In the first 8 days, he's putting the deals and the buyers together to be successful and be profitable in this business. Why? Because he came in, he asked questions, he learned, he said, let me understand the business. How does it work? Why do you guys do it this way? Like a true business owner, he thought like a business. He said, my number one objective here is to generate cash and convert that cash into cash flow. And I want to understand your systems and processes and do that. He came in and 8 days later, he is doing that right now, operating a real estate from anywhere franchise. Next, I own a real estate investing software business. Again, in the same vein, it's software. It's in the same vein. So I get to think real estate investing and I get to apply business to real estate investing around the software. I own the software FreedomSoft, freedomsoft.com. That is a real estate investing software that helps real estate investors like you find deals, automate their business, systematize, stay organized, launch websites, do the whole 9 yards. We've got it's a complete all-in-one encompassing real estate investing automation tool from A to Z. Now, next I have my real estate investments. I have my own real estate investment portfolio, and then I have other investments. So I have businesses and I have investments. You know what the common theme of everything is? It's all about generating income. It's all about cash flow. The key is I want my businesses to become more and more and more cash flow oriented. I want to put better people in the right seats on the bus so that my involvement in that business becomes a passive investor and less a day-to-day active operator. These are the things that I do in my business all day, every day. Now, I love to ski. I've been a skier my whole life since I was probably 4 years old. I love skiing. For the last nearly 20 years, I've been a telemark skier, which means my heel is not connected to the back of the ski. So I can drop my knee and I can ski. I love it. I've been on the ski patrol here in the Colorado Rockies as a telemark skiing ski patrol. Love it. One of my most favorite things to do. And I've got 4 rules of skiing. Number 1, tighten your sphincter because we're going skiing. Number 2, if you're not falling, you're not skiing. Number 3, and I like this one, ski till panic and then back off. And number 4, pain is temporary, bones heal, chicks dig scars, and glory's forever. Now I'm going to tell you a story. Here's the story. I was at Bridger Bowl, Montana, and Montana skiing is just like Montana driving. If you're dumb enough to do it, they'll just scrape you off the pavement, okay? Kind of the same way with skiing. If you're dumb enough to do it, hey, Have at it. This is Montana, wild, wild west. Go for it. So I'm in Montana, I'm skiing. I go to the top of the Bridger lift, and there's a catwalk about 100 yards or 75 yards down. And a catwalk is a roadway cut across the steep side of the mountain where a grooming cat can drive through. And they create a lip all the time. And if you hit that lip, you can launch into the air. Well, it happened to be snowing like crazy. The snow was coming down, probably 1.5 to 2 inches an hour. And off that lip, it dropped into this really steep black diamond field full of moguls. And I thought to myself, you know what? It's snowing. Everybody told me, don't do it, Rob. It's crazy. But I'm like, it's snowing. It's soft. Even if I wipe out, it's not going to hurt that bad. I really want to hit that lip and launch and see how far I can go. Everybody told me not to do it. I decided I was going to do it anyway, because how bad could it be? Yeah, it's going to hurt if I wipe out, but I'm going to make this happen. So I start cruising down. I hit the lip. I launch and I land on the top end of a mogul. I landed wrong and it threw me forward. And you know what happened next? Rule number 3 in my 4 rules of skiing was born. Ski till panic and then back off. But you know what the problem was? I skied till panic and I could not back off. And I'll tell you why. Because I got thrown forward. I was hitting the top and the top and the top of bumps straight down this hill. I could not stop. I was flying so fast. All I could do was look down and through the snow that was falling, try to see the run out at the bottom where I knew I could carve an edge and slow down. So all I could do was hold on for dear life and go Mach speed. And that's what I did. Bump after bump after bump after bump. All I tried to do, I couldn't slow down. I just had to hold on for the ride. Ski till panic, then back off was born on that day in Bridger Bowl, Montana. Now, how does this correlate to business? In business, people are going to tell you don't do it. They're going to tell you it's crazy. They're going to tell you the returns are too high. There's too much risk. Don't do it, is what you're going to hear constantly. You have to decide. Are you going to do it? Is it worth it to you? Are you willing to fight through the risk? Are you willing to make it happen? Only you know that answer. My push to you is start a business. Start a business that begins to generate cash. Figure out how to generate that cash and turn it into cash flow. The sooner you do this, the better off you will be. Now you can go to robswanson.com/business and see how to start a business. Go to robswanson.com/business and find out how you can kind of kick this thing off and what you might be able to do to fast track yourself into a systematizable, simple, scalable, high margin business that is all about and all designed to create recurring income. See, if you match these two things up, if you match the business with the investment strategy geared around creating recurring and passive income streams, you're going to get where you want to be in life faster. So I hope this was a helpful conversation. I hope this motivated you. I hope you're going to go over to robswanson.com/business and take a look and see what this is all about. If you have questions about this, FreedomCast hotline 720-605-6265. You can send in your questions. Shoot me a text, phone call, leave a voicemail. Let me know what I can answer, and we'll wrap that in on future FreedomCast show Q&A questions, and we'll dive deep into this stuff and help you get where you want to be. Now, as we wrap this up, I just want to say this. 3 things in business that I want you to go for. Okay, I've given you my top 4. I just want to say these again. High margin, recurring income, and scalable. If you can do those 3 things in business, you're going to set yourself up for success. So many people miss the opportunity to understand how to do those things. And that's why I want you to go over to robswanson.com/business, dive in and see how you can start taking advantage and doing this in your business. So for FreedomCast, what should you be doing? You should be starting a business. If you've already got capital, you've got to put that capital to work as quickly as possible in income producing passive cash flow investments. If you're ready, if you're prepared, if you're ready to do that, go to realestatefromanywhere.com and check out access to discount income properties nationwide. Simple page, opt in, take a look, talk to our team, see what is available. This is Rob Swanson for FreedomCast. This has been episode number 9. I'll see you in the next show. Bye-bye.